Well, we're going to get rolling here this week with our weekly webinars, and the volatility continues, and that's something I guess we could say we've been doing these now for almost 6 months. And the one thing that has been consistent every week is the volatility of the market, and what our goal is to try to bring you something, some information out each week that maybe people aren't quite looking at, or that we think could be important, or some big changes that are happening on a week-to-week basis. And over the last 6 months, and when we first started out, we said how competitive U.S. grain was on the world market, and we're going to continue to get export business. In December and January, we did have good export business, and then all of a sudden, South America and Brazil had some beans for sale, and then our bean sales died off, and U.S. beans weren't competitive. And on the corn side of it, it wasn't until recently that U.S. corn isn't competitive on the world market. But we've mentioned all along is that even though the U.S. wasn't competitive on the world market, we weren't at a situation where we'd see imports into the U.S. until we did last week's webinar, and we mentioned we are getting close, and we could see some beans potentially coming from South America into the U.S., and that was rumored strongly here last week. So what I really want to go through here this week is take a look at where the global market is, where U.S. corn and soybeans and meal are at compared to our export competitors, and then also try to highlight and when would we import. Okay, when we look at importing, not only do we need to look at price, the one thing we have to look at is freight rates. And it's important right now that you look at that you keep in mind that the freight rate from South America to U.S. is about $35 a metric ton, or 90 cents a bushel. Okay, and so when we start seeing South America offers that are more than 90 cents a bushel discount to U.S., then all of a sudden it triggers in that we could potentially see some imports. When we're looking at the U.S. market right now, we're comparing things. We're the highest. Argentina is the lowest, and they're their lowest right now because they are in the middle of their harvest. And what we are seeing with Argentina being more competitive, it seems to us that their crop size is probably getting a little bit bigger down there on corn for sure, and maybe even on soybeans. So where do we sit on corn compared to Argentina? And what I really wanted to look at here is where the market's been at over the last 3 weeks. And these are what cash corn offers are at the port. As you can see, on April 20th, just 2 weeks ago, U.S. corn was offered on the world market for $6.78 a bushel, and Argentina was down at $6.32. U.S. corn was only 46 cents a bushel more expensive. Last week, that difference was at 65 cents. But now today, you've got U.S. corn that's a full $1.35 a bushel above Argentina offers. Okay, we believe with this price spread in here right now that we could see some discussions of Argentina corn making its way into the U.S. Not only are we not competitive on the world market, but we could see some imports in here with this current spread. Now, this has widened out so much recently because Argentina is about 30 to 40% harvested. They are in the middle of their corn harvest, and there are strong reports in here that the crop size is getting bigger, okay, and could be getting as bigger as much as 3 to 4 million metric ton. That'd be over 100 million to 150 million bushels, larger than what we would have thought here a month or 2 months ago. So the Brazil crop may be getting smaller. The Argentina crop is getting bigger. Now on the bean side of it, as you look at this difference from 3 weeks ago from Argentina beans to the U.S., 3 weeks ago, U.S. beans were 82 cents more expensive, okay? And last week was at 98 cents. Well, all of a sudden last week, right when we went to 98 cents a bushel more expensive, right away there was rumors of imports, and the reason why is it made economic sense. Now from last Tuesday to right now, what we're seeing is the U.S. market continue to head up, but the Argentina bean price is actually a little bit lower. Just like corn harvest, they're in the middle of their bean harvest right now, and even though we haven't seen estimates that their bean crop is getting bigger, the way they're holding their price right now would tell us that they've probably got a little bit bigger bean crop down there as well. Now, if there's talk of imports with a difference at 98 cents last week, we're going to really see the discussion of potential bean imports into the U.S. with that difference at $1.60 in here right now. When I get over to the meal side of it, just quickly, 2 weeks ago, U.S. meal was about $35 a ton higher than Argentina. Last week was down to $28.50. Now this week it jumped up to $47. Again, it's $35 a metric ton to import. Not until this week. Does it make sense? Now we're bringing this up because we don't want to be doom and gloom on these markets. I mean, we just made new highs this week. The trend is higher and there is a lot of hype, but we need to remember where we're sitting at compared to the world market. Just like in 2014, imports put our high in there. And in 2019, when we put our summer high in place, what happened is the U.S. was just not competitive on the world market at all. The other thing we really want to take a look at here this week are some seasonal charts. Right here, we've got a December corn 20-year, a 15-year seasonal. I have the 20-year seasonal as my title, and it's really a 15-year seasonal chart. And we just like to point out that seasonally, this market does peak out from mid-April until mid-June. Historically, the earlier the crop is planted, the earlier we'll put in a seasonal high. Again, we're not going to say the high is in place on corn. We got a lot of weather in front of us. But with the early planting and off to a relatively favorable start, we're definitely in a window right now where we can have a seasonal high put in place on new crop corn. When I get over to the bean side of it, seasonally the bean market puts its high in a little bit later in the year than the corn market. That just makes sense from an agronomic standpoint. But the one thing we got to keep in mind in here is these markets tend to peak out in here in the May-June timeframe unless we have some major weather issues. We just think these seasonal charts are some good information for you to have. Encourage you to print them off. Now, as we wrap this up in here this week, what it comes down to, and the thing that just hits us in the head from last week to this week, is that imports make economic sense. Okay, and when I get back to the last time we had large-scale bean imports was 2014. Okay, and the bean market put in its high on May 22nd that year, which corresponded with good plantings here in the U.S. Okay, along with imports of South America beans. When I get over to the corn side of it, rarely have corn imports taken place. I'm sure we've seen some small, imports of corn, but it just does not occur on a large-scale basis. That's will be interesting to see what happens here. Now, our thinking is we may not get imports of corn from Argentina, but what you could see if their price is that much cheaper, you could see some of the world buyers who've got U.S. corn booked already, maybe switch that to South American origin, or take their old crop purchases and make them the new crop. You need to remember, and I'm going to use China's example, if they've got old crop corn bought for delivery in June, okay, if they can buy Argentina corn more than $1 a bushel cheaper, they might buy that and then move their June sales to new crop and save $1 a bushel that way as well. We mentioned we very rarely have seen corn imports, but we have seen feed wheat imports before. Right now, that doesn't look likely. It's really on the edge in here right now, whether if large-scale feed wheat imports would make sense or not. I'm going to wrap it up. Seasonals need to be respected. Crops getting planted as we visit with producers. We're off to what we believe is a pretty good start. There's a long weather market in front of us, no doubt about it. What we just think guys have got to be focused on on risk management plan. How much do I want to have forward contracted? Or do I want to budget some dollars for some put options at these current price levels? Fully expect volatility to stay high. The excitement is just starting in here, and we look forward to bringing you this webinar every week. Any questions, make sure to drop us an email. Thank you.